The loudest investors often lose the fastest. They celebrate every trade. They post every gain. They announce every move before it has time to mature. They confuse visibility with progress and attention with success. But markets don't reward noise. They reward patience. History quietly shows us something powerful. The investors who build lasting wealth are rarely the ones seeking applause. While some chase excitement, others study in silence. While some react to headlines, others prepare for years. The crowd moves emotionally. The disciplined move deliberately. And over time, sometimes slowly, almost invisibly, the silent ones win. Not because they are lucky, not because they are louder, but because they are patient. Today, you'll understand why silent investing creates real wealth and why discipline will always outperform emotion. Welcome to Silent Wealth Stories. This is not a channel about chasing trends. It's not about quick flips, viral trades, or overnight success stories. This is where we study how real wealth is built, quietly, deliberately, and strategically. Because if you observe the investors who last decades, the ones who preserve and multiply capital over time, you'll notice something important. They are rarely the loudest voices in the room. They don't react to every headline. They don't broadcast every move. They don't invest based on emotion or social pressure. They operate with structure, with patience, with restraint. Here we focus on those principles. We break down how disciplined investors think, how they assess risk before reward, how they position themselves early, and how they allow time and compounding to do the heavy lifting. Because sustainable wealth is not dramatic, it is methodical, it is consistent, and often it is quiet. The noise trap. Modern investing has slowly transformed into entertainment. What was once a disciplined financial activity is now packaged as daily drama. Breaking news alerts flash across screens, market commentators react in real time, social media feeds overflow with predictions, hot takes, and urgent opportunities. Every hour, there's a new must-buy stock. Every dip is either the end of the world or the opportunity of a lifetime. Everything feels urgent. But here's the uncomfortable truth. Urgency is rarely a sign of value. It is usually a trigger for emotion. And markets are extremely efficient at transferring money from the emotional to the disciplined. The loudest investors often operate on reaction. They chase momentum because they fear missing out. They buy because others are buying. They sell because others are panicking. They confuse movement with progress. But activity is not the same as growth. A portfolio that moves constantly is not necessarily a portfolio that compounds. This reactive cycle creates volatility. It creates excitement. It creates conversation, but it does not consistently create wealth. Real investors understand something different. They know that excitement feels productive because it gives the illusion of action. Discipline, however, often feels slow. It feels uneventful. It feels boring. And yet, discipline is what protects capital. Discipline is what captures undervaluation. Discipline is what allows compounding to work uninterrupted. While noise seeks attention, discipline seeks results, and over time, results are what remain. Silent investors study patiently. Silent investors do not rush. They understand that money made quickly is often money lost quickly. Instead of chasing price movements, they study businesses. They ask deeper questions. How does this company actually make money? Is its revenue consistent or unpredictable? Does it carry dangerous debt? Is management competent and disciplined? Does this business still matter 5 or 10 years from now? They read financial statements. They examine cash flow. They analyze long-term earnings trends, not just quarterly headlines. While others are watching price charts tick every second, silent investors are studying fundamentals. And then they wait. This is where most people fail. Waiting feels unproductive. It feels like you're missing something. It feels slow. But opportunity does not disappear overnight. Strong businesses rarely go from undervalued to overpriced in a single day. True value reveals itself over time. Silent investors understand that timing improves with patience. They don't move because something is trending. They move because the numbers justify action. And when they finally invest, it is not based on hype. It is not based on social media excitement. It is not based on fear of missing out. It is based on data, on analysis, on preparation. Patience gives them clarity. Clarity gives them conviction. Conviction removes emotional decision-making. And when emotion is removed, mistakes decrease dramatically. This is why silence creates advantage. While others are reacting to headlines, they are preparing behind the scenes. While others are chasing noise, they are building